Okay. So, good afternoon, everyone. We have Dr. Alpa Ghosh with us today. She will take your academic counseling for MMPC004, Accounts and Finance. Actually, she is a very senior faculty of Bhopal School of Social Sciences and Bhopal, Madhya Pradesh, which is a state in India. I request Dr. Alpa to kindly give a short introduction of yourself, and you can also interact with the learners for introduction, and further you can proceed for the academic counseling. I welcome you. Namaskar.
Thank you so much, ma'am, for introducing me. So, good evening, everyone. I can see 14, 15 participants have already joined. So, myself, Dr. Alpa Ghosh, I'm having a teaching experience of more than 15 years. And since 13 years, I have been working as a professor in the Bhopal School of Social Sciences. It is an autonomous institution in the state of MP, and it is located in the capital, that is in Bhopal. So it is a institution of which is run by the Archdiocese Bhopal. So it's a missionary institution, and I am heading the Department of Management. So on behalf of IGNU, on behalf of BSS, and on behalf of India, I welcome you all. We are hoping for a great few days for having this subject as one of the core course in your MBA. So am I clearly audible to everyone? Just let me know.
Yes, you are clear.
Okay.
Yes,
So,
ma.
Yes,
okay,
you're
thank you
clear.
so much. Thank you. So, in between, if you have anything, you may stop me, you may interrupt me and ask. By the time, this is a course which is purely related to finance, because this is your first semester, but in after second or third semester you may be asked to go for a specialization. So this will be the base for adopting a specialized subject. And just let me know if you have been to this subject before also during your graduation. Have you been with this subject, accounting? Yes, Usman Nasir, please.
Yes, ma.
Okay.
Yes, ma'am. We have quite a bit. Yeah. Thank you.
Okay.
I haven't been there.
Okay. Okay, thank you so much for responding. So we are going to start with our subject.
Excuse me, ma.
Yes, Susanji.
Excuse.
Yes, Susani.
We can't see you, ma.
Acha.
Yes, ma'am, we want to see your face.
Okay, just give me 3 minutes. Actually, there was some problem. I don't know what is the technical. Anyhow, I
Okay.
managed with the mic. I am
And
keeping
are
on
you able
silent.
to present or not?
Yes, ma'am, that I am able to.
Ma'am, one thing I want to convey to the learners, in between you can start. I request everyone, because you might have different names of your email which appears here on the screen. So I need to note your attendance. So please write your attendance with your name in the message box, which can help me for that.
Okay, ma.
All of you write, okay? Okay. In
So I will
between, you
just
can
repeat.
write.
Yeah, yeah. I will just repeat.
Okay.
You
Yes.
just give your attendance in the message form, okay? All those who are attending the session, please,
With your name.
yeah, write your name with which you are registered, not the name which is appearing on the screen or as a username.
Yeah.
Excuse me, ma'am. Do we have to write it
Yeah.
again? I've already written my name on the message. Do I need to write it again?
No, I can see
You
it.
have
I
got it.
think
Okay. Thank you.
it's there.
Thank you.
No, it's not appearing. Just a minute. No, you need to write it again.
Okay, ma'am.
It will be nice if all of you write it, okay? Okay, so if it is done, can we start?
Yeah, sure, ma'am.
Okay. I have shared my window. Is it visible?
Yes, it is, ma'am. Thanks.
Okay. So this is the content. Our course code is MMPC004 and the name of the course is Accounting for Managers. So we are going to have this under 5, as you can see, 5 blocks. We are going to study this. Each block has few chapters. As today we'll be dealing with the first block. The first block has 5 units, or this units you can also call it as chapters. Then we will be moving to second, third, fourth, and fifth. For now, I have been allotted with 4 lectures. If required, if we are not able to finish it, then I will be asked for one more class from Smriti ma'am. So if we start with the first one, first block, we can see it is accounting and overview. When we say it is accounting and overview, it means that it is already somewhere, it has been taken at graduation level. So when we start with the first one, introduction to accounting, the course content is what is accounting, how it is going to help you, what you are going to study under accounting, what are the basic characteristics of accounting, and so on. Then it is preparation of books of accounting. As we know, accounting is something which requires thorough knowledge of procedures, rules. So when we talk about preparing books of accounting, it is based on certain principles. And on the basis of those principles, we try to maintain certain books, which is mandatory as per the accounting rules. So we need to find that how those books are prepared and how they are going to help us in maintaining those books. Next, it is financial statements. Along with the preparation of the accounting books, we need to prepare certain statements also. These statements are the gist of your accounting, are the gist of a company. It is the mirror of any company that whatever transactions are taken place, it is reflected through these accounting books and financial statements. There are several statements which is used as an allied feature of your accounting books. It is not mandatory, but in order to support your accounting books, those financial statements are also mandatory. Next, it is preparation of final accounts of companies. Final account of company is your trading account, profit and loss account, and balance sheet. Mostly the companies prepare it on periodic basis, and the period is one full financial year. And all we know, the financial year is from April to March. But in certain cases, it can be a calendar year also, that is from January to December. And final accounts includes your trading, profit and loss, and balance sheet. Trading account and profit and loss account are the statement of accounts, and balance sheet depicts the statement of your assets and liabilities. Last, it is cash flow statement. With the help of final account, with the help of balance sheet, you cannot make out what is the cash position of your business. So in order to find the cash movement of your business, that what is your inflow and what is your outflow during a particular period, we need to prepare this cash flow statement. So this is what we have to study in block 1 in accounting and overview. The rest of the blocks that we will introduce when we will have classes. So if we start with the first one, that what is accounting? As you can see, we need to find out first what is the objective, what we are going to understand after completing this first unit. So we are going to study the nature and role of accounting, what is the meaning and objectives of accounting, what are the different branches of accounting, who are the users of this accounting information, and the basic concepts, principles, and conventions. Conventions are beliefs that we implement in maintaining the books. So when we start with the first one, that is the introduction part, objectives and scope of accounting, I am just going to read out the bulleted points. The first objective is it is accounting is done to maintain a systematic record of business transaction. Systematic record includes that when you are making the payment, to whom you are making the payment, when you make payment, what is the reason of making that payment, and is that payment purely used for business, or in the name of the business it has been used by some person, or what. So the first one is systematic record of the business transaction. It is maintained, all the financial transactions, all the monetary transactions, they are maintained date wise in your books. And for maintaining this systematic transaction, we need to record, document each transaction in a book which is known as journal. Journal is a day book where we record whether it is a credit transaction or a cash transaction in the chronological manner. Chronological order means that as and when they occur. If it is occurring today, we need to put the first entry today, and that second entry will be of tomorrow. You cannot bring second entry first and followed by the entry which was previous or prior to that. So it has to be maintained as and when it has been occurred. From these books of journal, that is day book, it has been transferred to ledger, which is individual heads book. That under, suppose you have to pay Mr. X. So how much amount you have to pay to Mr. X? What amount you have paid? So all the details related to Mr. X will be appearing under one head, and the name of that book is your ledger. The next one is trial balance. In trial balance, we shift the accounts from ledger to trial balance, that entries with credit balance to be shifted and entries with debit balance has to be transferred. Am I clear with the first one?
Yes, ma'am.
Just
Yes.
okay. At any moment, if you feel that there is something which is not understandable, please feel free to ask. So thank you. Coming to the next, the second one is to ascertain profit and loss. The the record of this monetary transactions in a proper manner, in a systematic manner, helps us to ascertain the profit and loss, helps us to know the position of profit and loss of a business. It helps to know that we are doing business and what is the end result of the business. In order to find out whether the business has earned profit or it has incurred any loss, or if it is lying on neutral, we have to prepare profit and loss account, which we'll come to know when we move to the next. To determine the financial position is the position of your assets and liabilities. I hope everyone is aware about what is asset, what is liability. Asset means the properties that we own. Asset means anything that helps us to have profit in near future. And liability, that means which we have to pay. Assets are always owned by the company, by the firm, and liabilities that we owe to others. We have to make payment, that is your liabilities. So we need to find out the financial position in terms of assets and liabilities, the position of assets and liabilities at a particular period, and this we can find out a certain with the help of balance sheet. So in order to find profit and loss, we prepare profit and loss account, and in order to find out the position of assets and liabilities, we prepare balance sheet. This profit and loss account and balance sheet, they are known as final accounts of a business. They gives you the clear picture of the financial health of a business for a particular period for which it is prepared. Coming to the next is to provide information to various users. Accounting informations are being used by various users at different levels. It has been used by the stakeholders to find out what is the position of the business, how much profit it is gaining, so that it can be helpful in investment. It helps them to find out what will be the position of their dividend. It helps the researchers to make a study on the industry. It helps the management to take good decisions on the basis of the financial health that is presented in the form of balance sheet and profit and loss account. It also helps the management, it assists the management by to analyze the financial data in the form of reports, how much cash they want, how the management is going to handle the business, if they want to go for expansion or diversification. The results of this accounting transactions is going to help them a lot. So it is not only helpful for the company, but it is also helpful for all the other stakeholders. It is helpful for the government because with the help of this accounting information, the government can collect tax, the government can prepare proposals, the economy can find out that the industry is going to help in the economic development. Is it going to add any value to the industry? So it is not only the employers, it is not only the directors or owners of the firm who are benefited with the accounting information, but the accounting informations are helping others also to the same extent. Now, coming to the second one, scope of accounting. Scope means what? You can see the diagrammatic presentation of this. Scope means that where it is used. How you, when you have accounting transactions, accounting informations, how this accounting information is going to be used, or what are the uses of this accounting information. So at the top, you can see that there is a creation of data and collection. The data creation and collection is from historic or predictive sources. Then this data is processed either manual, or nowadays various softwares are available. So either you are processing it manually or with the help of electronic processor, the, and on the basis of certain accounting methods. You cannot bypass or overrule the accounting methods. So the data are recorded and then it is processed. What happens? The result is your evaluation. Data evaluation is what? It helps in budgetary control, performance analysis, fund flow analysis, internal auditing. That means it helps to prepare the budgets of the firm. It helps to find out the efficiency of the firm, So it goes for performance analysis. It tries to find out the movement of funds in a particular period, and then it also helps in internal auditing. When the auditors come, if you don't have any accounting data, what they're going to look for, what they're going to audit for. So they are going to audit this account, the company, the financial position of the company, with the help of accounting documents that you have recorded, documented, and you are providing to them. On the basis of that, they can easily find out that the accounting transactions, after all, the accounting transactions are related to money. And whenever there is any involvement of money, we have to be double cautious. So we need, through auditing, the management tries to find out, and they try to keep a check on the accountants and on the employees, that the money, the funds, the finance of the company is used in the proper and set manner. And then we go for the reporting of the data, which is going to help to the management. The reporting may be internal, the reporting may be external. When it is internal, it is helpful to the management. When the data reporting is external, it is going to help the government. It is going to help the government, it is going to help the researchers, it is going to help the stakeholders, it is going to help the investors. So this is the scope of the accounting information. And now we are coming to the definition of accounting. There are various organizations who have defined accounting, but the most used information is definition is given by the American Institute of Certified Public Accountants. This says that it is the art of recording, classifying, and summarizing in significant manner and in terms of money, transaction and events which are in part at least of financial character, and interpreting the results thereof. Now, if you go for decoding this definition, the decoding of this definition is that accounting has been defined as the art of recording. Recording means it has to be documented. If you have paid 100 rupees for wages, you cannot say ki, okay, tomorrow I am going to note it down. No. As and when the transaction occurs, it has to be documented, it has to be recorded. Recording means documenting it in the books of accounts. You have to classify. Accounting is also classifying. Classifying means the nature of the transaction, whether the transaction is a payment transaction, it is a receipt transaction, it is an expenditure, or it is used for the purchase of certain asset. So you need to classify the nature of the transaction, and then summarizing in a significant manner. Summarizing all the transactions which are of same nature are classified under one single head. So accounting is the art. Why it is art? Because you have to though it is been followed by proper rules, proper procedures, proper accounting theory, but then to the way it is presented, it has to be creative. Each and every person who is making these books, they use their own perception followed by the accounting rules. So that is the reason why it is known as the art of recording, classifying, and summarizing in a significant manner. What we do, all the transactions which are in terms of money, those transactions are taken into account. These transactions has to be for a particular period, and the important aspect of all these transactions is that they should be financial in character, in nature. And once these transactions are recorded, classified, and summarized, then the results of these transactions, of these records, are being interpreted, and the results are thereof presented to the required departments. So this is the basic and most used definition, and there are many other definitions also. You can have it as per your requirement. Next, we will start with, to understand accounting efficiently, we should understand the aspects of accounting. We will come to certain words, certain terminologies which we use while recording, classifying, and summarizing the transactions. I hope till this I am clear.
Yes, ma'am.
Yes, you are clear, Prof.
Okay.
Yes, ma'am.
So I'm again repeating, those who have joined late, there you have to mark your attendance. You just have to write your name in the chat box. If anyone has joined late, it's our earnest request to please write your name in the chat box, because you may have joined with some other user ID or some other name. We require your registered name for marking the attendance. At any point, if you think that I am bit fast, you can stop me. I'm bit fast because we need to finish this first block today.
Okay.
Okay?
It's okay.
Okay, thank you. So now coming to the next, economic events. What is economic event? It is an event which results with financial transaction. Anything like purchase of machinery, paying transportation charges, installation of machinery, or so on. We need to identify, measure, and record these transactions. Organization refers to the business houses, company. Assets are those resources which are already, I told you, owned by the organization, and it helps the organization to earn more and more profit over the years. These assets are being possessed, owned by the enterprise. The assets are plant and machinery, furniture, fittings, land and buildings, books, computers, vehicles, etc. There are tangible assets. Tangible assets are those assets which can be seen, which can be felt, but there are certain intangible assets also which cannot be seen, touched, or felt. It is only the value addition of these assets. Example, goodwill, example, patent, copyright, etc. You cannot see goodwill, but goodwill do exist. It adds value to the organization. Next comes liabilities. Liability, it is an obligation. You have to pay off your liability. All the obligations or debt that is payable by the company, by the enterprise to others is referred as liability. So it is the responsibility of the organization that as and when there is a liability, we have to pay it off. Liabilities may be classified as fixed liability and current liability. Fixed liabilities are those liabilities which are long term, which can be paid within the period of 3, 4, 5 years. But current liabilities are those liabilities which are to be paid within a period of 1 year. Any liabilities, any borrowings which are to be settled off within a period of 1 year or less than 1 year is your current liabilities. We have owner's equity. Equity is nothing but it is shares. Owner's equity is one of the three vital segments of a proprietor's balance sheet. When we talk about equity, equity means equity is a part of your asset. When you try to find out the total asset, it is liabilities plus owner's equity. Asset equals to liabilities plus owner's equity. So, owner's equity itself is a liability to the organization unless and until it is winded off. Now, if we move to the accounting cycle, the first concept, what is accounting cycle? Cycle, everyone knows. When we talk about cycle, it is something which is circular in flow. So, when we talk about accounting cycle, yes, anyone wants to say something? Yes, please.
No, Ma, you can continue.
Okay, thank you. So, when we talk about accounting cycle, those transactions and events are recorded which are financial in nature, which are having monetary valuation. So, therefore, first of all, such transaction and events are identified which are having monetary value. we need to measure these transactions. The transaction and events which can be measured in terms of money, first they are to be identified. Next, recording the transactions. The first step is identifying the transaction. Second one is measuring the transaction. And third is recording of such transactions. Where we record, such transactions are recorded in your day book, that is journal or subsidiary books. We need to classify the transactions according to their group or according to their nature. Once the transactions are classified, they are summarized and they are transferred to trading account, profit and loss account, and balance sheet. Next, we need to analyze and interpret this financial data, and then we need to communicate the financial data and we need to prepare the reports. So this whole process is known as accounting cycle. Am I clear? Accounting cycle starts from identifying the nature of transaction, then measuring them, recording them, and ends with data interpretation and reports. We have a bookkeeping and we have an accounting. There is a slight difference between bookkeeping and accounting. Bookkeeping is the measuring, recording, and classifying. When we talk about the accounting cycle, bookkeeping is still classifying those transactions. Accounting is where bookkeeping ends. Once you have summarized, classified the transactions, then the preparation of financial statements, preparation of profit and loss account, balance sheet is your accounting. And accountancy, it is the branch of knowledge where we study the accounting. Where we study the accounting principles, its techniques, it is known as accountancy. So there are three terms which you must remember. It is bookkeeping, accounting, and accountancy. Coming to the recording of transaction in the books of account, there are two methods in recording the transactions in the books of accounts. It is double entry system and single entry system. Double entry system, the double entry system is based on dual aspect principle, where each and every transaction has two aspects. One aspect is debited and the other one is credited with the equal amount. One aspect is debited and the other one is credited with the equal amount. Suppose if you have paid wages, then in that case, wages is an expenditure. So you are going to record it under the head of wages also, and you have to record it under the head of cash also or bank also through which you have paid. So when you pay wages, there are two aspects which are into function. One is wages and one is cash. And the amount for both the heads is going to be same. Coming to the second one, this system of accounting recognizes and records both aspects of transaction. Minimum two accounts are involved in each of the transaction, and the accounting equation should not be violated. What is the accounting equation? Accounting equation is assets equal to liabilities plus equity. So this is your double entry system. When we talk about single entry system, here only one aspect is taken into account. What is that one aspect? Here we do not go with the dual aspect. So under this single entry system, we take one aspect and then we record that aspect. For wages and cash, we will be taking only cash. That cash has been paid for against the payment of wages. If we talk about the scientific system, which system is to be followed in maintaining the accounting, we follow double entry system of accounting. It is a scientific system and it is accepted worldwide. Single entry system is not a scientific one, as many of the objectives of accounting are not met in single entry system. In double entry system, we find that it is a complete record of all the transactions. So these are all the uses of following single entry or double entry system. This is application of accounting that you can go with, that what are the areas where it is used. It is used for decision making. It is accounting information helps you to raise loans. It helps you to settle the tax liabilities. It helps to the management in going for strategic managerial decisions. So these accounting informations are helpful to all. There are certain limitations also. It has certain drawbacks also. So the limitations are that it is not precise. Accounting is often subjected to personal bias or judgment. You may think that one aspect is debited and another one is credited, but a person may also have the opinion that the same may be credited and debited. So it depends on the perception of the individual who is maintaining those accounts. Next, it is not accounting is not done on historic values of assets. We take into account the current values. We ignore the effect of price increase, price changes. Whatever value is recorded in the books, that is taken into account. We also ignore the qualitative information, like what is the reason for which the monetary transaction has incurred. And if it is also affected by window dressing, you don't know what accountant is presenting you. If accountant is manipulating the transactions and then it is presenting in a systematic manner, so you cannot make it out. Coming to the qualitative characteristics of accounting information, it is reliable, it is having relevance to the decision making. On the basis of it, you can go for decision making process. It understands the ability of each and every person who is using that. It is comparability also. You can compare the data of this year with the data of the previous year, which will make you understand the changes and variation in your performance level. This is all done. Now coming to the branches of accounting. When you start with the branches of accounting, first is stewardship accounting. Stewardship accounting, it is the old form of accounting where only the wealthy people employed stewards to manage their property. Big people with lot of wealth, they did not know how to manage their own wealth. So what they use? They used to keep certain persons, certain employees who will manage their property. So the stewardship accounting is dedicated to those people who were very wealthy in the historic times, and the notion lies of such accounting at the root of financial reporting. Whatever we do nowadays accounting for our company, that was done by the people, by the employees, for their owner, for the people who were rich. Then it is financial accounting. Financial accounting, it is related to the company's accounting. Joint stock companies, limited companies, the accounting of joint stock companies are your financial accounting. Cost accounting deals with the cost part. What is the cost per unit in production? What is the total cost for a particular product? So cost unit doesn't deal with profit and loss, but it is only giving you the overview of how you can control the cost, how you can control the wastage, and how you can minimize the cost of production and increase the profitability of the business. Management accounting. Management account is the mix of cost and financial accounting. Management accounting is helpful in decision making by the management. It emphasizes on detailed information It tries to draw conclusions, it tries to draw figures and reports it on the basis of financial data. And it is a strategic decision which has been taken by the management. Social responsibility accounting. Social responsibility accounting, it is a new addition in the development of accounting, and it is used because companies with large returns, they are being now made compulsory to go for social responsibility, to work for some welfare, some benefit to the society. So the government needs to find out that how much you are socially responsible to the society, to the country, whether you are surpassing the environmental laws, or you are taking care of ecology or not, you are not using the scarce economic resources widely. So these all are being accounted and audited in the form of social responsible accounting. Next comes human resource accounting. Again, the employees, the human capital, the employees that is working in an organization, they are termed as human capital. And nowadays government is also concerned about the people, about the employees who are working in the organization. So in simple words, we can say that the investment of people and the replacement of cost, it is not very much welcomed. If you go for the mechanized system of accounting, it means that a single system, a software, can replace hundreds of people. So how much it is beneficial to the society, to the company, and to the people's income? So we need to find out human resource accounting, that proper sanitation, proper hygienic conditions, proper payrolls, proper perquisites are given, proper allowances, house rent, they have been provided to the employees working in the organization or not. Sorry. Next comes inflation accounting. Inflation accounting, again, it is a branch of accounting where we take care about the inflation, current inflation rate, which is persisting. That means we try to do the accounting, take the figures as per the price level changes. So, again, this is also one of the branches of accounting. Next comes accounting personnel. Who is accounting personnel? The accounting personnel is the person, the accountant who is responsible to record all the transactions. He is the employee of the company and he is responsible to maintain all the books of accounts in a proper manner. Am I clear till this? Accounting personnel?
Yes, you are.
Yes, ma'am.
Okay. Now we have when we talk about accounting personnel, we have the internal auditors who take care of the internal accounting, and the function, and the controller. Controller may be the head, he may be the CA, the director of finance, anything who is heading the accounts department. The functions of the controller or the accounts head is he designs the accounting system, how the accounting system has to be operated. The design of that operation, of that structure, is given by the controller. The controller prepares the financial statements and reports. The accountant is only responsible to record the transactions, but the interpretation and the final touch of that report is been given by the controller. He helps in establishing and maintaining the systems and procedures. He helps in external audit. He forecasts the future. He tries to estimate and forecast that what is going to be in the next 2, 3, 4, 5 years. He prepares budget on the basis of his forecasting. He reports all the financial information to the management, and he is also responsible for tax management and maintaining a bridge. He is a link with the outsiders and the company. So these are the different organization structures, people working in the department. Now, if we start with the accounting concept, we are worldwide, we have to follow something which has to be accepted by all. So there are certain principles, rules, which are known as accounting principles, and they are man-made. These principles are man-made with the consultation of all the countries' accounting organizations. These principles are accepted because they are believed to be useful. In general, they have been accepted, and it depends on how well it meets the three criteria. The accounting principles has to be relevant, objective, and feasible. So when we talk about an accounting principle, it has to be relevant to the extent that its results are meaningful and the information that is derived from they are being used by the business. It has to be objective and feasible. Feasible means that it can be implemented without any complexity or cost. Coming to accounting concept, there are different types of concepts which are used. The concepts are, first one, as you can see, it is there on the screen. It is business entity concept. Business entity concept is a concept where business is different and the people or the owner of that business is different. Business is an individual person, artificial individual person. It is an enterprise, and it is nothing doing with the owners. So there is a clear-cut distinction between business and the owner of the business. Second concept is money measurement concept. Money measurement concept in accounting, as I said before also, all those transactions are to be recorded only which can be termed in terms of money. If the transactions doesn't have any financial value, they cannot be included as accounting transaction. Next, it is continuity concept. Continuity concept is also known as going concern concept, where we feel that, we say that if the owners of the business can move on, they keep on changing. It may be the grandfather, then the son, and then the next generation, but the business remains the same. The business is not affected with the life of the owner, as business is an individual entity, it is an artificial person, it is having the identity of an entity, so it will continue to operate for a long time unless and until it has been winded off. It is not affected with the life of the owners of the business. Business is different and the owner's life is different. Next comes the cost concept. When we talk about the cost, whenever we record the transaction in the books, we have to take certain value. So we prefer to take the historic cost of the assets. The assets at the price in which they are acquired are to be taken into account. Every time with the change in the price level, we cannot make a change in the value of the assets also. Next, it is accrual concept. Accrual concept is as and when the transaction occurs, we need to record them based on the nature. We are not going to make any distinction between the credit transaction and cash transaction. Even if the transaction is resulting into credit transaction, we need to record that transaction. So accrual means as and when the transaction has occurred, whether in cash or in credit, we need to take a note of this. We need to record the transaction in the books of accounts. The next concept is concept of conservatism. Conservatism means believing something which is not good. The concept of prudence is also known as conservatism, that we always anticipate no profit in future, but we always provide certain measures for all possible losses. we try to find out, we always believe that if in future we have losses, we should always maintain certain reserves so that the future losses can be minimized. This means that an accountant should follow a cautious approach. He should record the lowest possible value of assets and revenues and the highest possible value for all the liabilities and expenses. So, if you say that you have gone for a credit sale and when you approach the debtors for recovering the payment, you may not get the full amount. If you are having a debtors of 1 lakh, you may find that the debtors are not paying you full 1 lakh rupees. They have paid you only 90,000. The 10,000, it is a bad debt. So you must be having a provision that if full amount is not realized, not recovered, then we are prepared for that. Next, it is materiality concept. Materiality concept, it is a concept where we take into account all the material informations. Material informations are those informations which are related to the business. If there is a fight between two people, that fight is not recorded in the transaction. But if there is a loss to furniture arising out of that fight, the amount, the loss is recorded. That what is the value of the furniture which is damaged. So the fight is irrelevant, it is not material information, but the loss occurred due to that fight is always recorded in the books. Consistency concept, consistency is following the same rule. Every now and then you cannot change the rules of the business. There should be a consistency, a sequence followed. Periodicity concept, we take the period of 1 year. So whenever we make the records, we prepare the records, we need to follow a particular period. You can have a period of 15 days, 30 days, 6 months, 1 year, but whenever we take the transactions, this has to be lined up with the same period. Especially we go for a 1 financial year, that is 12 months. Accounting next. Once the concepts are clear, we come to the accounting standards. Is accounting concept clear? Any one of you, if you have any doubt in any one of the concept, please feel free to ask.
So good, ma'am. Thanks.
Okay. Okay. So now next it is accounting standards. So what is standard? It is a set of rules. When we talk about any accounting standard, that means it has been specified in the Companies Act. Whatever standard is specified, that is followed, whether you are doing the accounting work here or in any part of the world. So there are certain accounting standards which are accepted worldwide, and those accounting standards are generally accepted accounting principles, which is known as GAAP, and it is being certified by the American Institute of Certified Public Accountants, that is the Chartered Accountants Institution of America and India. They have developed this accounting standards, and all the accounting transactions are based on this accounting standard. That if you need to debit a particular head, it is debited in every case. You cannot say that for me it is a debit and for you it is a credit. If a particular head has to be debited in the books, for every case, the nature of that particular transaction has to be debited. So this is the first part that is over. You can go with the self-assessment questions, and while doing the self-assessment questions, you can come across your understanding, that how much it is clear. Coming to the next, chapter 2, it is preparation of books of accounts. There are various books of accounts which are prepared, and these books of accounts are the books of accounts are, first you need to journalize the transactions. When you journalize the transactions, it is recorded in your day book, that is journal. From there, it is transferred to ledger, which is known as posting. Then we go for trial balance, and from there we prepare financial statement. So a business enterprises generally prepares two basic financial statements. One is profit and loss account and balance sheet. And with the help of balance sheet and profit and loss account, we also prepare a statement which is known as cash flow statement. So when we talk about accounting process, the first accounting process already discussed in the first chapter is we need to identify the transaction, record the transaction, and then this you can see it is a circular flow. This flow chart is in circular flow motion. So this we can say that it starts with identifying the transaction, then recording them, journalizing them, posting them, preparing the trial balance, preparing the finance, and finally preparing the financial statements. And with the help of the statements, we prepare the financial reports. So when we talk about analyzing the business transactions, we come across certain terms. The terms are like this. The first one, which is there on your screen, it is voucher. Voucher is nothing but it is a proper evidence, a piece of paper where you make the entries. Voucher is related to making the payments. So when you talk about making payment, it has to be documented that what is the nature of the payment, whom you have made the payment, for what is the reason the payment is made, and there is a person who authorizes the payment. So it has to be recorded date wise, and on the basis of that voucher, the record is entered in the books. So voucher, it is a supporting for your payment. Am I clear? Voucher is a evidence. Whenever there is an audit, people go and search for voucher. So each transaction is recorded in the books of accounts, and those transactions, the details of those transactions are available in the voucher. Next, we have a payment. First is payment voucher. We have a receipt voucher also. It also contains the information for about the purpose for which the money is received. It is signed by a responsible person who is known as authorized signatory, authorized person, and the management has to authorize someone who can receive the money. We have a transfer voucher. A transfer voucher is used to record the residuary transactions. An internal transactions which is not involving any cash payment or cash receipt is recorded in the transfer voucher. Suppose you are transferring an asset from one department to other department, then for credit transaction, then for making the provisional entries, we use transfer voucher. Next, we prepare balance sheet. Balance sheet is simple, recording the assets and liabilities. The balance sheet pro forma is like this. This left hand side, we start with liabilities, and right hand side, it is the assets. In liabilities, we note down all the fixed and current liabilities, and in assets, it is all the fixed and current assets. The total of liabilities and assets side should be equal. In order to make the journal entries, we need to classify the accounts. The classification of accounts are like this. The accounts are classified as personal account, real account, and nominal account. Personal account is related to the natural person, artificial person, or representative person. Natural person is the individual or company is the individual Personal account is the company, the enterprises, and representative personal account is the accounts which are representing certain individuals. We have real account where goods and assets are recorded. It may be tangible, it may be intangible, and we have personal and we have nominal accounts where all the income and expenditures are recorded. Do you have the content? This content you have?
Yes, Professor, we have the content.
Yes.
Everyone?
Yes.
Okay. So I request you, everyone, that I am
Yes, ma'am.
giving you the gist, and then when you go through it, it will be more clear to you. And in the next class, like tomorrow, we have a class. Whatever we are taking up today, you just go through it, read it, and if there is any doubt, we can have a discussion tomorrow before taking up the next block. Is it clear?
Yes, it is clear, Professor.
Because for all the 2 hours I will keep on speaking, but that content should be there in your mind also. So unless and until you read, you cannot recall each and everything.
Yeah.
You people are working, or you people are only studying? You all are students.
Working as well.
Okay. So just we can take a 5 minutes break. I also need to drink water. Can we have a 5 minutes break? Because continuously I was speaking, I need water.
Yes, no.
Okay,
Yes, no problem, Professor.
okay,
Yes, no
just give
problem.
me 5 minutes,
It's
okay?
okay.
Then I will be back. Just 5 minutes.
Okay.
It's okay.
Okay, thank you so much. Okay, so thank you. Am I audible?
Yes.
Okay.
Yes, ma'am.
Okay, thank you.
Yes, yes.
Thank you.
Yes, yes, ma'am.
Yes, I got it. Thank you so much. So now we were talking about the, we have done about the types of accounts, that what is the nature of accounts. Now, if we start with the rules for debit and credit, so if you start with the rules for debit and credit, these rules for debit and credit are based on the nature of accounts. So the nature of accounts, as you can see, we have seen three types of accounts. One is personal account, one is real account, and third is nominal account. So these, all the heads, all the types of account which fall under this type of accounts, they are either to be debited or credit. So if we start with the first one, that is the personal account, I told you the first one in personal account is the individual person. So who is an individual person? It can be me, it can be you, it can be some XYZ. When it is in the name of a natural person, it is your personal account. Artificial person or artificial personal account, it is the account of companies, it is the account of institutions, it is the account of organizations. Artificial person means the person which has been authorized by law and which is a separate individual in the eyes of law. Representative personal account, like some amount is due. Who is going to receive that amount? The receiver of the particular amount, particular head, is known as representative personal account. Real account, all the types of assets and goods are to be under grouped under real account. Next, it is your nominal account. Nominal account, the accounts relating to your income, your expenditure, losses, and gains. Gains means your profits. They are being classified under nominal account. It can be the examples of wages account, rent account, interest account. Interest may be paid, interest may be received, salary account, bad debts account, and so on. So we need to find out the rules for debiting and crediting this account, and these rules are known as also golden rules of accounting. If you go with the type of account, the personal account, what is the rule for debit and credit? Personal, it is an individual, it is a company, it may be representation of some person. So whenever any amount is debited, any goods is received, or any amount is received, the person who is at the receiver end, he or she has to be debited. If it is a company, the company is debited. If it is a person, the person is debited. And one who gives the goods or amount, it is credited. So personal account, debit the receiver, credit the giver. Real account, I told you it is asset or goods. So whatever comes in has to be debited. Comes in where? In your business. Anything which comes in your business is to be debited, and the things which are going out of your business, it is credited. So I repeat, real account, debit what comes in, credit what goes out. Nominal account, we nominal account, the nature of nominal account is expenses, income, profits, gains, and losses. So any expense, we need to debit all the expenses and losses. Any nature of account which is falling under expenses and losses category are to be debited, and all the incomes and gains all the incomes and profits are credited. So I repeat, nominal account, we need to debit all the expenses and losses and credit all the incomes and gains. So it is not very difficult to study and by heart this, because you need to understand the basic principle lying by this. If you know, you can categorize, you can classify the type of account, that it is falling in the nominal account, personal account, or real account, then it becomes very easy to follow the rules for debit and credit. I hope it's clear. Shall I repeat the rules?
Yes,
Yes.
please do, ma'am.
Yes, ma'am.
Okay, I'm repeating it again. The rules for debit and credit of all the transactions, we know that what are the types of account. The types of account are personal account, real account, and nominal account. Personal account is related with company, organizations, institutions, or an individual. So whenever anything is received by the individual or by the company, it is debit the receiver. One who receives, it is debited, and one who pays, one who gives, it is credited. So debit the receiver, credit the giver. Real account, under real account, it is all goods and assets. So whenever goods or assets are coming in the business, they're entering your business, you are debiting. And if it is going out from your business, like if you make sales, in sales, goods are going out of your business. So sales is credited. When you make sale, cash is coming in the business. Against sale, you are receiving cash. So debit what comes in, credit what goes out. So what is going out? Goods. And what is coming in? Cash. So cash has to be debited and goods has to be credited. The third one is your nominal account. What is the nature of the nominal account? The nature of the nominal account, that it is dealing with, it is classified under all the expenses, losses, gains, and what to say, and all the incomes. So incomes, expenses, losses, and gains. So when we talk about any expense and losses, they are debited. And whenever we receive anything in the form of income or profit, income, if we are receiving, say, interest, it is your income. Interest is income against your investment. So credit all the incomes. If you're selling an asset and against that sale, you have incurred a profit of 10,000. That 10,000 is your gain, it is your profit. So it will be credited. If again for the same transaction, there is a loss against the sale of the asset, against the sale of the building, or against the sale of the machinery, you have incurred a loss of 10,000. So it is a loss, you are going to debit it. You are receiving salary. Salary is the expenditure of the company. So the company is going to debit the salary account. So nominal account rule is debit all the expenditures and losses, and you are required to credit all the incomes and gains. This is the simple rules for all the three types of accounts. It is the rule for debit and credit. I hope now it's clear.
Yes, ma'am.
Okay. These practicals you can try, and if there is any problem, you can let me know. Okay, now here it is the nature of account. This is a simple table I am taking. First one is building. Building is an asset. I hope everyone knows building is an asset. So building will be under your real account. Purchases is related to goods. So purchases is real account. Sales is again, it is related to revenue, income. So it is nominal. Bank deposits, bank is there, institution is there, bank is an institution. So it is a personal account. Rent is an expenditure, it is a nominal account. Rent outstanding, you have to pay rent which is already outstanding. So it has to be paid to the landlord. So it's a personal account. So like this, we need to categorize the accounts. Journal is making the entries either in the debit form or in the credit form. The performer of journal is like this: date, particulars, ledger folio. This is kept blank. Only we need to prepare the column. Ledger folio means when the transactions are transferred to ledger, what is the number of that ledger, in which what is the number of the page where the transaction is transferred. We make an entry here. We write the page number that this transaction is transferred to this page number. Then I told you every entry has a debit and credit aspect, as we are following the double entry system. So each and every transaction has to be debited and credited with the equal amount. So first is date of transaction. Particulars, that is the nature, which account you are debiting and which head you are crediting. And then in debit amount and in debit and credit column, you have to only mention the amount, not the head. This they have given. Okay. I'm searching for a question where you can see the transactions. Yeah. So this is the transactions. Can you see here where I am highlighting it? Can you see this? Is it visible?
Yes, ma'am, we can see.
So what it is written? Transactions during the month of March. For a particular month, the transactions are given and you are required to journalize the transaction. The first entry is on 2nd March and they are saying that received rupees 2,800 cash from Mr. A in full and final settlement. Received rupees 2,800 from Mr. A in full and final settlement. If you are receiving rupees 2,800 from Mr. A, it means you are having a sale with the person. You have sold the goods. So it will be a sale transaction. Purchase goods at the least price of 10,000 and at a discount on credit from Mr. Z. When we have discount, there is a basic rule for discount that in case of discount, if it is a trade discount, the discount is not reflected in your books. Suppose this entry, 10,000 rupees is the purchase price and it is available at a discount of 10%. It means what is it costing to us? Can anyone say how much it is costing to us? Please speak. if you are having a purchase price of 10,000 and it is being offered at a 10% discount, then what is the cost of that product? How much it is costing to us if we are availing it at a 10% discount? Come on, speak up.
9,000.
9,000.
9,000.
Very good. It's 9,000. So when we purchase it for 9,000, why we are going to show 1,000 in our books? We are going to make the entry directly for 9,000. But if once they say that its cost is 9,000, we will make the entry for this transaction as 9,000. But if they say against this 9,000, if you pay the amount in cash in full settlement at one go, you can avail another 10% discount. And this additional 10% discount is subjected only if the payment is made in cash. If it is credit, you are not going to receive the amount discount, and this discount is subjected only on payment of cash. That means if you are purchasing it at credit, it is costing 9,000 only. But if you are purchasing it for cash, it means that in that 9,000, you can again avail a discount of another 10%. So what is the 10% of 9,000? It is 900. So now the original cost, yeah, now the original cost is 9,000 and you are availing a cash discount of 900, which you have to reflect in the books. And now what is the amount that you have to pay? 9,000 minus 900, that is 8,100. The cash payment that you will show in your books, it is for 8,100. But the cost of the product remains same as 9,000. This 900 which you are paying less, it is your cash discount. So just remember this, that cash discount is always highlighted in your books. Trade discount is never highlighted. We deduct the value of trade discount from the price of the product, and the net price, the final price of the product, the final value is taken into account. It is only cash discount which is reflected in the books of accounts. Am I clear with the concept?
Yes, Professor.
Is this clear, everyone? Be honest, there is
Yes,
no
ma'am.
issue if you ask again and again. I'll be more than happy to answer to your queries.
Yes, it is clear.
Okay.
I don't know whether I was audible. I was saying I needed you to go through that. I'm lost quite a bit.
Can I call you Grace?
Grace is my name. Yes, please.
Okay. So, Grace, you want me to repeat this?
Yes, please. I would truly appreciate that.
Okay, I
Thank
will. I
you.
will. What I am saying, Grace, that you told just now that the cost, if you avail 10% discount on a purchase price of 10,000, the net price of the product will be 9,000. Till this, he was online.
Yes.
Okay.
Yes.
If you purchase a product for 10,000 and the shop offers you a discount of 10%, then the cost of the product to you is 9,000. 10% of 10,000 is
That's
1,000.
correct.
So when you deduct this 1,000 from 10,000, it is costing to you as 9,000. Okay. So this 10,000 minus 1,000, 9,000, you are going to take the value of the product, the purchase price of the product as 9,000. Now there is a condition. The shopkeeper says that if you pay the full amount in cash, in that case, you can avail an additional discount of 10%. But this 10% is applicable only to those who are making cash payment, not to those who are going for credit transaction. So again, when you avail 10% discount on 9,000, how much you have to pay? 9,000 minus 10%, 900, that is 8,100. So when you record this transaction in your books, you are going to show the purchase price full with 9,000. Then you will show discount received as 900 and payment of cash to the shopkeeper as 8,100. So this will be the full entry of the transaction. So what actually I want to convey to you all is that trade discounts are never reflected in your books. We do not make any entry for trade discounts, but we always try to depict, we always try to show and reflect the cash discounts, because cash discounts are meant not for all, and it is only for those who are making the payments on the basis of cash. So trade discount is never reflected in your books, but cash discounts are always reflected in your books. Am I clear now?
Perfect. Perfect.
Okay, thank you.
Thank you.
Now if I come to the next, just a minute. So these are the transactions. This is on the basis of can you see this entry? Cash account to sales account, 9,000 and 9,000. 10,000 was the price and 10% is the discount. So 10,000 minus 10%, it is 9,000. So it is cash account to sales account 9,000. We have paid cash 9,000, and why we have paid cash 9,000 against the sales. So whenever we make entries, we have to think that we are the company. Am I clear? We have to think that we are the company and we are making the payments or receiving the payments. The transaction is on our behalf. So when you make sales, what happens if it is a cash sales? Goods are going out of your business, and against those sales, against those goods, you are receiving cash. So cash is coming in the business. So cash is your real account. Goods is also your real account. Both are real account. And what is the rule for real account? Debit what comes in, credit what goes out. So against sale, what is coming in the business? It is cash. So you can see in this transaction, it is cash. Cash has come in the business. I'm just highlighting it. So cash account, debit what comes in, cash came in, against what? What has gone out? Goods. Why the goods are out? Because it is a sale. So credit what goes out, debit what comes in. Cash account debit to sales account. Sales means goods. When you go for debit, you do not write anything. But when the transaction, the accounting head is credited, we always use the word to. To itself means that it is a credit, and for debit, we do not use any word, so it is a debit. Am I clear? For all credit transactions, you need to add the prefix to with all the words. Whenever you make any entry with the word to, it is presumed that it is a credit transaction. Am I clear? Did you understand
Yes,
what is
ma'am. Yeah.
the word to? Because if you write cash and sales, we cannot understand that what is cash and what is sales. So in order to differentiate, identify these two, one has to have certain differentiation. And what is that? The differentiation is on the basis of this word to. To is always assigned with credit transaction. Okay? Coming to the next ledgers, Now ledgers like this cash account will be transferred to cash ledger. So all the transactions which are having cash account, all the transactions with the name cash, whether it is a debit or credit, they will be brought under one umbrella, and the umbrella is cash. All the sales account will be under one umbrella, irrespective of any date. So you can come to know that how much cash is transaction has taken place in total, and how whatever is the nature of the transaction, what is its in terms of total, that is identified with ledger. So ledger is the total of all the accounting heads. This is your format for ledger. Name of the account will be on the top. Like I said sales account. So here will be sales account. It means that this is the ledger of sales account. Sales is always a credit transaction. Sales is always a credit transaction. So all the entries will be in the credit side. There will be no entries in the debit side, but the format says that there is a debit entry also and there is a credit entry also. The debit side has date, particulars, general folio number and amount. If you remember in your journal, I told you that the entries are transferred to ledger and you need to mention the ledger number, that is page number. Here you are bringing these entries from journal. So from which page number of journal you are transferring this entry, the journal page number has to be mentioned. F stands for folio and folio means page number. And the credit side also same. Few transactions, like if you take cash can be received, cash can be paid. So cash is a nature of account where it is debited also, it is credited also. So for such transactions, you need to make the entries, all the debit entries in the debit side, all the credit entries in the credit sides. Am I clear?
Yes, ma'am.
So the posting is done. If you are making a posting in the ledger, it has to be posted with the word by and to. For credit side, you will be using for credit side, you are bringing it from to, so you will write by, and in the debit side, you will write to. So this use of words to and by is optional, but I prefer using this. Like you see here, cash account debit to sales account. This is a journal entry. Cash account debit 12,000 to sales account 12,000. So cash is debited and sales account is credited. Now first we'll prepare the cash account. This is the second one, ledger. I hope it is visible to everyone. Is the journal entry clear? Just let me know, is the journal entry clear?
Yes, ma'am.
Yes,
Okay.
yes.
It was.
Now, okay. Now we will transfer this entry to ledger. We are going to make the posting. Posting is made for, first you take cash account. So the ledger account, it is for cash. Now the format says it is date, particulars, JF and amount. And again date, particulars, JF and amount. The first one left hand side is debit amount and second one right hand side is credit amount. So now you have to make the posting. This entry is for what? Cash account. So when it is for cash account, we look to the corresponding entry. The corresponding entry of cash account is what? What it is? It is sales. Are you getting? What is the corresponding entry for cash account? We are preparing cash
It's
account.
debit cash and credit sales.
Sales. Okay.
Yeah.
So we are preparing cash account. So cash account is already reflected here. Isn't it? Cash account is reflected here. So if we again take cash here, it will be a double entry. It will be a duplication. So what is the entry which is corresponding to cash? Why there is cash entry? Because there is a sales. So when you prepare a cash account, or the entry which you are going to post in the ledger, it will be cash is debited. So in the debit side, you will write to sales account, the corresponding entry. Am I clear? Cash is
Yes,
debited,
ma'am.
the transaction is debited. That's why you will make the posting in the debit side, but it will not be with the same name because the name is there already as a heading. It will be with the name of the corresponding entry, that is to sales. Now, if you come to the next one, that if you prepare sales account, now what is the sales account here? Sales account already you are preparing, so you cannot write to sales account. Sales account is a credit entry. So in the credit side, why sales has occurred? Against that sales, there is a cash transaction. So the corresponding entry is cash account. So in the sales account, in the credit side, as sales is in the credit side, you will write to cash account. Am I clear?
Yes, ma'am.
Okay. The side will be same. If it is a debit side, you are going to post it in the same side, but with the corresponding nature of entry. Is this clear?
Yes, ma'am.
Yes, but a
I
question
cannot
there
listen.
from Akim, I think.
Can you please repeat? Because I think there was some technical glitch. Can you repeat again, please?
I say that there is a question from Akim. I can see.
It is there in the text. Which question you are talking about, Bora?
I'm talking about the end of Akim, but he.
Akim is there in the group?
Sorry, ma'am, it was mistake.
You want to say something, Akim? Akim, please open up. Do you want to say something?
Hello, I didn't intend to raise the hand. It was just an error.
Okay. So I take it, I presume it that it is clear to you all?
Yes.
Okay. Thank you.
Yes, ma'am. Clear.
You all please practice this. Okay. After posting from ledger, we need to have a posting to the trial balance. So we need to make the entries with debit balance has to be transferred to the debit side, and the entries with credit balance has to be transferred to the credit side. So the illustrations are given. You just go through them, then you will come to know that how it is recorded. Here are the self-assessment questions. This is the journal one. Okay. You have to journalize these transactions. Clear?
Yes, ma'am.
You can see there are so many questions given. You can start with the generalizing of these transactions. Now coming to the next one, I will finish this one very soon, this third one, and next two that I will take it in the tomorrow's class. This is introduction to financial statements. What is a financial statement? Financial statement is the preparation of final accounts. Final accounts is your trading account, it is profit and loss account, and it is your balance sheet. So when we prepare the final accounts, we need to identify the revenue. Revenue means your income and your expenditures. There are certain expenditures which are direct in nature, but there are also certain expenditures which are indirect in nature. So we prepare a receipt and payment account where we note down all the receipts mean all your revenues, all your incomes, and payment, it means all your expenditures. Then we prepare trading account. Trading account, it is an account where we take into account all the direct expenditures which is related to the production. Factory expenditures, manufacturing expenditures, production expenditures, all the expenditures which are of this nature, which is done at the factory end, production end, they are your direct expenditures. And once the goods are produced, then the expenditures occurred for its sales, distribution, it is your indirect expenditures. So when we talk about the trading account has two sides, debit side and credit side. The credit side is for your income and closing stocks. It is your sales, which is treated as revenue. And the debit side is for all your expenditures. It is your opening stock, it is your purchases, it is your purchase of raw materials, labors, if you pay carriage, fuels, this is all. So when you make a total of credit side minus debit side, the balance is your gross profit. This gross profit is taken forward to profit and loss account. This profit and loss account is again, it is your summary of indirect income and expenditures. So when you take the profit and loss account, we need to find out the operating profit. So this gross profit is brought here, and these are the nature of indirect income and expenditure. You just go through them so that we can have a hands-on practice tomorrow. Okay? Then we go for income statement, which is a profit and loss account. Profit and loss account, we need to find out from the trial balance that which accounts will be posted to trading and which accounts will be posted to profit and loss account. Trading account and profit and loss account has the same format, where we end with trading account. After leaving one line, we start with the profit and loss account. The format remains the same, debit side and credit side. All the direct income and expenditures are in the trading account, and indirect income and expenditure is in your profit and loss account. I told you what is your direct income and expenditure. Till the goods are produced, till the cost of goods are ascertained, all the factory expenditures, all the production expenditures, they are your factory expenditures. And when the goods are produced, when it is taken out from the production house, all the expenditures which is incurred for distribution, sales, these are categorized under your indirect expenditures. The balance of trading account is either by gross profit or gross loss. If credit is more and debit is less, it is gross profit, and vice versa. And this gross profit or gross loss is carried down to your profit and loss account. And same way, if the credit side of your profit and loss account is more and debit is less, it is your net profit. And if the debit side is more and credit side is less, it means the income is less, so it is your net loss. This net profit and net loss is carried forward to the capital account. It is transferred to the owner's account, which is known as capital account. Okay? Next, we have balance sheet. I already told you what is balance sheet. Balance sheet is the summary of your assets and liabilities. The first hand is your liabilities, which is your obligation, and the second one is your assets. That means the properties which you own, which the company owes. So you can see what all are there. The liability side, it is capital, loan, which you need to repay. And in the asset side, it is all your assets, whether it is a machinery, it is building, it is motor car, vehicles, investment, inventory. Inventory means your stock, cash, and bank account. The most surprising part in your balance sheet is that the total of your liability side and the total of your asset sides, both are equal. Am I clear till this?
Yes,
Yes,
yeah.
ma'am.
Other side,
Yes, ma'am.
okay. So balance sheet is what? Balance sheet means the summary of your assets and liabilities. Assets and liabilities, the total should match. So the total of your liabilities and assets will match, and if it is matching, that means your question is solved. This all is based on your dual aspect, that is double entry system. So this till this three chapters or 3 units, you need to go through it and practice the questions. Go with the terms which are given. I told you what is cash, what is current asset, what is fixed asset, what is current liabilities, fixed liability, and current asset and current liability, they are for a period of 1 year or less than 1 year. And long term, it is for more than a period of 1 year. So please go through the terms and go through the basic principles, concepts, terminologies that we have studied today. At the end of each chapter, you have the practice questions, so you need to go through them. And just let me know, there is a summary at the end of each chapter. Okay, so one thing you can see here in 3.12, here it is, they have given you a list of all the keywords. So please go through these keywords, because these keywords are going to come or occur oftenly in all the chapters. You should be aware about what is asset, liability, current liability, intangible asset. I told you what is tangible and intangible. Tangible, that can be seen, that can be felt, that can be touched, and intangible, that cannot be seen, felt, or touched. Contingent liability, you have a liability. Liability is fixed. You know that after 3 months you have to pay to your creditor. But there may be certain there may be some, at some point of time, there may be some unwanted event. Certainly, there is something for which you were not prepared. There was no provision, and it becomes a liability. You need to pay for some contingents, emergencies. So they become your contingent liability. Fixed asset, the assets which are used for earning more and more profits. It is your fixed assets. It is plant, machinery, building, vehicles, furniture, etc. Owner's equity, the claim of owners against the assets. Balance sheet, you know what is a balance sheet. You know what is revenue. Revenue is a part of your income, and revenue occurs against the sales. The result of sales is revenue. Revenue is always compared with cost. We expect that revenue has to be more and cost should be less. If cost is more and revenue is less, then it is a loss to the firm, and no firm can operate for more years on the basis of continuous loss. Expense, you mean? What is expense? In the daily course, the payments that you make for the functioning of the firm. Payment of salary, payment of wages, payment of stationery, miscellaneous expenses, staff welfare expenses, for incurring revenue, for against sales. Whatever expenditure is made, it is termed under your expenditure. Realization is a part, like there is a debtor. You have made a credit sale. So against that credit sale, are you able to get the payment back? That is the realization. Matching concept, your revenue, I told you your revenue should match always with your cost. Accrual, you know, as and when the transactions occur. Cost of goods sold, the total production cost. Depreciation, due to continuous use of machinery, fixed asset, there is a gradual decrease in the price of the asset. It may be due to expiry of the period, it may be due to the wear and tear, it may be due to the continuous use. So the gradual decrease or fall in the price of an asset is termed as depreciation. There is a decrease in the value of the asset. The value with which the price has decreased, the asset value has decreased, that particular decreased value is known as depreciation. It is a loss to the business because the value of the asset has come down. So it is treated as a loss for a business. Profit and loss, you know, when the profit and loss items are transferred in profit and loss account, then we prepare our financial statements. So this self-assessment questions you need to do. That's all for today from my side. If you have any doubt, you may please feel free to ask, or else we are going to meet tomorrow at 7 p.m.
Ma'am, I have a little
Yes,
query,
Isha?
please.
Please speak.
You're a little bit fast toward the end part of the lectures, especially for someone like me who is not accounting oriented. Everything
Okay.
is new to me, and you're a little bit rushing.
Isha, we can do one thing. I have to be very fast, okay? Because limited time is given to me. So what we can do now, you just go through the content and you make a note of what all you have not understood. Okay?
Okay, ma'am. Thank you. Okay, ma'am. Thank you. Thank you.
And then we
I
can
agree.
discuss it. Then
I'll
we
do
can
the
discuss
same.
it.
Okay, ma'am. Surely.
Okay?
Okay. Thank you.
Grace, you wanted to say something?
I think it's the same point. Not that you're really very fast. I think I'm also
Grace, I
like
do understand that I am fast, but at the same time, we have to cover so many chapters, so many units. And this is the first one, which is only an overview. When we
I'm
talk about,
saying, I was saying I agree that maybe we go through and then come back. It's
yeah,
okay. Yeah.
it's very
It's,
important that once you read it, then the concept will be more clear, because I am continuously scrolling. Whatever I am saying, you are
sure.
listening only to me. You don't have the content with you. Or you just take a printout of the content and then you can turn out. Okay, because at the same
Sure.
time, when I
Sure.
am scrolling, you are not able to read it
Okay.
properly. That
Sure.
I do understand.
Sure. Thank you.
Others, please. I know this is a not a normal course. This is something technical, and you have to be familiar with the terms that we are using, about the rules that has to be applied, because these rules are basically, when it comes from your school education. And as you are not a commerce student, accounting student, so it will be a bit difficult for you all to take away or to understand the things. So a little more hard work or revision is required for this particular paper, for this particular subject. It's not like some other subject where it is pure theory. What is written, you understand. Here you have to apply the logics, okay, based on rules. So we need to have little more practice regarding this particular subject. So may I end the class?
Sure. We'll see you tomorrow.
Yes, ma'am.
See you tomorrow,
See you.
okay?
Thank
So
you. Thank you.
in my country, it's good night. What is in your country
Good
right now?
afternoon.
Good evening or good day? Good afternoon. Okay, fine. So from my side, it's good night, good day. See you tomorrow, okay? Thank you.
Okay. Bye bye.
Thank you. Bye.
Bye, bye,
Thank
bye.
you.
Bye, bye.
Bwana tulo kumoni mbuzwa. Ko akachete gani?